I'm Danielle Hale, Chief Economist at Realtor.com, and here's what you need to know this week. GDP data show that the economy grew in the fourth quarter. The better second half of the year was enough to make up for the first half decline, meaning the economy grew in 2022, but just barely. Also, data from the Fed's preferred measure show that inflation continued to slow. It's still more than twice the Fed's target, but it's a good step in the right direction. Consumer inflation expectations also shrank. This may be a factor behind the uptick in consumer sentiment, which rose for a second month. In another positive, mortgage rates are at their lowest level since mid-September for a second week in a row. After peaking in early November, mortgage rates have been on a relatively consistent downward trend, as inflation data has come in better than expected. Next week's Fed meeting could interrupt that progress, but as long as inflation continues to recede, that bodes well for lower rates. Lower rates are likely a factor behind new home sales climbing modestly in December. At the same time, pending home sales followed a similar pattern, up in the month but down over the last year. Both new and pending home sales are based on contract signings, the first step in a home sale transaction. They tend to be an indicator of completed sales over the next 1 to 2 months. With both new and pending home sales steadying, albeit at much lower levels, it suggests that we may have seen the low for home sale transactions this cycle, a good sign with the ever-important spring buying and selling season on the horizon. One factor that might undermine the home sale recovery is the rental market. Rent growth slowed further and is back to a pace we saw just before the pandemic. Additionally, the monthly math on the rent versus buy decision in 45 of the 50 largest markets favored renting over buying, and the gap was largest in major tech markets. There are reasons why buying can make sense, even if it's more expensive in the short run. But for those on the fence, the cost difference in many markets may mean that they continue to rent rather than buy in 2023. This means homeowners need to set reasonable expectations if they want to sell. Realtor.com weekly data show that median list prices are still up, but by a shrinking amount, while buyers have a big increase in for-sale homes to choose from. The extra inventory and still high costs have erased the sense of urgency buyers had. Sellers in this market will require a measure of patience because homes are spending 2 weeks longer on the market compared to 1 year ago. And finally, Realtor.com's December Hottest Markets report shows that affordability is a key feature in the most in-demand housing markets. While lower costs are overwhelmingly found in the Midwest and Northeast, for the first time in 6 months, all 4 regions have at least one area represented among the 20 hottest markets. You'll find the details along with our housing data for download at Realtor.com/research. You can also follow us on Twitter for real-time updates.